From AAAFx, this is Chris taking a look at dollar yen. Initially, we dipped below this little trend line and then turned around to show signs of life as the US dollar did get a little bit of a boost during the Monday session. Question is now, do we truly take off to the upside or not? Well, I think this comes down to the bond market, so you'll have to pay close attention to the 10-year yield in the United States. Keep in mind that even though people believe that the Fed may cut rates in March, the reality is the Bank of Japan is nowhere near raising them. So even if we do see the Fed start to ease a little bit, they have to ease quite a bit for it to be attractive to hold the yen longer term. Now, specifically, I think the yen will fare worse against other currencies that may yield a bit more. I mean, if you can get your hands on the Mexican peso, Japanese yen pair, that's probably an excellent one. South African rand, yen. But in this case, the US dollar yen pair, I still think has plenty of buyers underneath. If we break down below the lows of the day, then I start looking at the 145 level as being a potential floor in the market. Breaking above the top of the candlestick, and then the highs from the Thursday and Friday session opens up a move to 149.8. That's an area that has been important more than once. So it'll be interesting to see how that plays out. If we do, in fact, break out, I do expect a lot of noisy behavior, especially considering that Friday is the jobs report in the United States, and that moves the 10-year yield, which moves this pair quite significantly. Regardless of what we've seen as of late, we're still very much in an uptrend. And in fact, I would draw your attention to this area here. We broke down through the 50 and then bounced again. Well, that's kind of what we're doing here. So you have to ask, is this just a pullback? Is this a buying opportunity? Only time will tell, but I do think that more likely than not, we have not seen the last of US dollar buying.